All right, welcome everybody to the Research Committee Study Group. I'm your host, Don Bird. I am so excited to be here, guys. We are going to be talking about so much here in this book club. I want to welcome you guys. If you've never read a book on investing, this is the book for you. This is the book I want you to read, guys. It's very straightforward. It's going to get the conversation started, and it's my book. So, guess what? It's great to talk about, but it's nothing out of the ordinary as far as investing is concerned. It's just straightforward, and it's your first investing book, guys. So I want you to go ahead and get it. Here it is. It's a guide to investing. It's written by yours truly, me. And if you've never read an investing book before, I want you to go and grab it. All right, guys. Welcome to Investing 101, Building Wealth Through Smart Investments. This is a comprehensive book designed to equip you with the fundamental knowledge and skills necessary to navigate the exciting world of investments. Whether you are a complete novice or have some experience investing, this book will help you build a solid foundation to make informed financial decisions and work toward building your wealth goals. Now, how many people can get down with that, guys? This is a straightforward way to introduce yourselves to the world of investing. Investing isn't only for the wealthy people, only for the experts, right? It's a powerful tool that anyone can use to grow their money over time. And in this book, we will demystify the world of investments. We're going to break it down, and we're going to break complex concepts down into simple, easy to understand terms. And we're going to guide you through the entire investment journey from understanding what investing is to building a diversified portfolio, managing risks in those portfolios, and setting realistic financial goals. All right. So let's get started, guys, because this book is structured to take you on a step by step journey, starting with the basics and gradually building your knowledge and your confidence. Whether you're looking to save for retirement, fund your children's education, or simply make your money work for you, the principles you learn in this book will serve you well and add lifelong value. Guys, welcome to the Research Committee Study Group. If you are just getting here, guys, I want you to feel at home and I want you to settle in, guys, because we're talking about so much. And throughout the book, you're going to explore various investment options, learn how to assess your risk tolerance, understand the impact of taxes, and discover strategies to avoid common investing pitfalls. And by the end, you'll have the tools and knowledge to make informed investment decisions and embark on a path towards financial success. Guys, today we're going to be looking at chapter 1 of Investing 101. We're going to be laying the foundation for you as you build wealth and build your investing knowledge. Investing is not a one size fits all endeavor, and there's no single right way to do it. However, with the knowledge and skills gained in this book, you'll be better prepared to tailor your investment strategy to your unique financial circumstances and goals. So, guys, let's get started. Let's begin this exciting journey together, this exciting journey into the world of investing. Whether your goal is to achieve financial security, retire comfortably, or fund your dream projects, Investing 101 is your starting point for building a brighter financial future. So let's get started, guys. I'm so happy to be here, guys. I want to welcome all the people who are here on the Zoom call. All right. I want you to raise your hands if you want to ask a question. But we are going to save our questions for the end. And we're going to get right into chapter 1, which is understanding investing. Guys, feel free, leave in the comments if you want to join our research group, the research committee, the research study group. I want you to leave it in the comments. I want you to DM me right now because we're going to be going through this journey together, guys, and we're going to start understanding what investing is and what it really means. All right. Investing is the art and science of putting money to work with the goal of increasing its value over time. Now, while this might sound simple, the world of investing is diverse and can take on many forms. At its core, investing involves financial decisions today with the expectation of generating a return on your investment in the future. So, what does that all mean? What is investing? Investing is utilizing the information that you have right now and making decisions today that will benefit you financially in the future. That's what the challenge of investing is. And without a crystal ball, you naturally introduce a level of risk to the equation because you don't know how things are going to actually go from today. So, what is investing? And we're going to define investing at its essence, at its core. Investing involves allocating your money, your assets, your resources into various other assets or instruments with the intention of achieving one or more of the following objectives. Wealth accumulation. The primary objective for most investors is to build wealth over time. By investing wisely, you can potentially grow your initial capital and achieve financial security and independence from the money that you were able to invest that multiplied into more money that you can use later for your lifestyle. You may want to invest to generate income, right? If you had $1 million and you wanted $100,000 a year, you could potentially structure a portfolio that could give you that, and you could keep your $1 million as your $1 million would then work to make money for you. Some investments, whether they are dividend paying stocks or bonds, are designed to provide a regular stream of income. Investors seeking current income often rely on these assets to meet their financial needs, right? And then you have other goals outside of wealth accumulation and income generation. Investing can also be goal oriented, whether you're saving for retirement or a children's education or your dream vacation or a home or anything. Any investment can be tailored to achieve specific financial milestones. And like I said, with the future involved, the role of risk cannot be understated in the investing endeavor. The return on your investments, they are uncertain, and it's influenced by a variety of factors that we don't know because they're in the future, including economic conditions, market fluctuations, and the type of assets you invested in, right? So when we think about it from that perspective, understanding and managing risk is a fundamental aspect of investing. And with that, investments come in various forms, each with its own characteristics. Now, there are some common investments that we all know about, right? Stocks, bonds, real estate, mutual funds, ETFs, alternative investments, private equity. Those are all types of investments, right? What are stocks? Stocks are shares of a company ownership. What are bonds? Bonds are debt securities issued by governments, municipalities, or corporations. They pay interest and return the principal at maturity. Well, what is real estate? We know what real estate is. Everybody's familiar with real estate. All right. Tangible property. And then you can rent those or you can see that property value appreciate. Mutual funds are like stocks and bonds. They just are pooled vehicles that have plenty of stocks and bonds in them and a professional manager to help you with the management of that. Alternative investments are simply investments that aren't those investments, right? There are many other types of investments that people utilize that are not stocks, bonds, real estate, mutual funds, or ETFs when you think about it. So that is what type of investments are out there, right? Now, what's the difference between investing versus savings, right? It's essential to distinguish between the two. That's why we're talking about it. That's why we're here. Saving typically involves putting money in a safe, easily accessible account with minimal risk, while investing involves taking on greater risk in pursuit of potentially higher returns. Now, how does that happen? The power of compound interest is virtually inseparable from investing. All right. And that's what makes investing so powerful, right? Embarking on the journey of investing exposes us to the power of one of the most potent forces on earth, and that's the power of compounding. It allows your money to grow not only on your initial investment, but also to grow on the returns over time. If you invest $1,000,000 and get a 10% return, you gain $100,000. But the next 10% return is on 1.1 million, not just on the first million. So now you get to gain 10% on the 100 you made before. And it just keeps compounding outside and after that, right? The longer you invest, the higher your returns and the more significant the impact of compounding. That's what we have to understand about investing. The three most incredible forces on this earth are gravity, compound interest, and mean reversion. And I'm struck by how vividly it illustrates the sheer strength of compounding when you compare it to gravity. And the longer you stay committed, the higher your returns, and the more you feel the impact of compounding. And understanding this means unlocking the potential for lasting financial growth and resilience. So, ahead, guys, we're going to learn about the different facets of investing, and we're going to learn about different strategies, different asset classes, and how you can make informed decisions to achieve your financial goals. Right. Before we dive deeper, though, it is essential to understand the types of investments available, guys. We talked about stocks, right? What are stocks? Ownership in companies, potential for capital appreciation, and they offer dividend income, right? We're going to go over these more in detail, but I just want to walk through these in chapter 1. What are bonds? Bonds are debt securities. They're like a loan from a company or to a company, and you get interest from those. But they are fixed income. The only way you make money on bonds is when interest rates rise and fall, which means your bond value will rise and fall as you hold that bond. But if you hold it to maturity, you're going to get back your investment. Right? We talked about real estate, which is physical properties, and real estate investment trusts are the securitized version of real estate. And it allows you to own a bunch of properties without the risk of owning a single physical property. Mutual funds, exchange traded funds, they are offering professional management who make investment decisions on your behalf inside of the portfolio, offering liquidity to you, daily liquidity, so you don't need to worry about any lapses in liquidity, and you can always have access to your money. Alternative investments are, again, things that aren't traditional investments. So things like hedge funds, private equity, commodities, and other esoteric investments that aren't publicly traded will be at cryptocurrency, will be part of the alternative asset pool, right? And of course, you have cash and cash equivalents. And an alternative can also be collectibles, art, and other antiques, right? Now, how do we manage all of that inside of a portfolio? First, it's important to set financial goals. Investing without clear financial goals is like embarking on a journey without a destination in mind. Your goals serve as the guiding star, directing your investment decisions and shaping your financial future. In this section, guys, we're going to talk about a lot here. We are going to explore the significance of setting financial goals and how they form the foundation of your investment strategy. Now, why do we set financial goals? For clarity and for purpose, right? Financial goals provide clarity and purpose to your investments. They help you define what you want to achieve, whether it's buying a home, funding your child's education, or retiring comfortably. It offers motivation. Goals serve as a source of motivation. They give you a reason to save and to invest consistently, even during challenging market conditions. And it offers you an opportunity to measure your progress. Your goals are measurable. You can track your progress toward achieving them, which helps you stay on course and make necessary adjustments. And of course, your financial goals influence your risk tolerance, and your short term goals may require a more conservative approach, while long term goals may allow for greater risk taking. Financial goals, of course, they can be categorized into three main types. You have your short term goals. Now, these are goals you aim to achieve within the first, say, 1 to 3 years of starting. Examples of this include building, say, an emergency fund, taking a vacation, or purchasing a car. Short term goals often require a focus on capital preservation and liquidity, whereas though intermediate term goals have a time horizon of, say, 3 to 10 years. And examples of that include saving for, say, a down payment on a house or funding a child's education. These goals may involve a balanced approach to risk and return. And naturally, if you have intermediate goals, you have long term goals. And long term goals extend beyond what we think about in the terms of like near term. So beyond a decade, and often involve major life events like retirement or a child's education or something really, really big. And basically, what happens when you have longer term goals like this is they allow for a more aggressive investment strategy, since you have a longer time horizon to weather market fluctuations. Now, what I like to do is look at things in a SMART goal framework to ensure that your financial goals are effective and achievable, right? And SMART stands for specific, measurable, achievable, relevant, and time bound goals. Instead of saying, I want to retire comfortably, specify the amount of income you aim to have in retirement and at what age. To make your goals measurable, make your goal quantifiable so that you can track your progress. For example, saying I want to have $1 million in retirement savings by age 65. All right. Now, when it comes to achievability, it's very important that we set goals that are achievable and realistic given your financial situation and resources. You got to avoid setting overly ambitious goals that are virtually unattainable and relevant. Ensure your goals align with your values and your priorities. Your goals should be meaningful to you. And lastly, time bound. Set a target date for achieving each goal. A time frame creates a sense of urgency and helps you stay disciplined. Now, how do you balance multiple goals? Most people have multiple goals simultaneously, which can be very challenging to manage. Balancing short term needs with long term objectives requires careful planning and often involves diversifying your investments to meet different goals, time horizons, and risk profiles. And as we go further into advanced investing, and as we go farther, and as we delve further into advanced investing, keep in mind that your financial goals will guide your investment decisions. The alignment of your investments with your goals is a key determinant of your overall financial success. And ahead, we will explore how to contrast and how to construct an investment portfolio. Ahead, in the chapters ahead, we will explore how to construct an investment portfolio that reflects your objectives your risk tolerance while maximizing your potential for success. In the chapters ahead, we will explore how to construct an investment portfolio that reflects your objectives and risk tolerance while maximizing your potential for success. All right, guys, listen, that does it for chapter 1. I want you to think about what your first experience with investing was and how do you think about wealth versus savings. And come to the next meeting with that, and we're going to talk a lot about those answers. I can't wait to hear from you. And enjoy. Look up a few things, go to some growth of the dollar charts and see how money grows over time. All right? And until then, we are going to see you in the next video.